Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in. Let's take a look, see what people are sharing. If you want to follow me, it's at Financial Score Finance. If you want to join our community, finding-value.com. I just released a midweek update for those that are interested to get my opinion on the market, what I'm looking at for mainly commodity companies. We do have a special going on. Special is the discount coupon code, 50% off the monthly membership and a larger discount on the yearly membership. We do have a question and answer session coming up this weekend, Sunday at 5 p.m. Mountain Time. So let's start with Patrick. He says bullish conviction is useless in a bear market. Bearish conviction is useless in a bull market. That is true. What you absolutely need is you need bullish conviction in a bull market. You cannot have bearish conviction in a bull market because what it will do is you'll continue to question the bull market. You'll say, "Oh, is this pullback? This pullback is the one. It's going to crash." You can't have that mindset and make a lot of money. So, what I would suggest is you need to learn the market conditions. You need to learn the ratios. You need to learn technical analysis. You need to learn all these things to gain a bullish mindset and a bearish mindset when they are needed. Now, there are people who change their mindset very rapidly. So when I look at the market, I look at everything from a secular viewpoint. A secular viewpoint means that I take a long time frame viewpoint. Other people in the market, they take shorter time frames. So what they'll do is they'll take a 6 month or 1 year time frame. When oil bottomed in 2020, we came out of the bottom from a ridiculous setup in technicals, a ridiculous setup in ratios, a ridiculous market bottom of the end of our consolidation. We broke out of the consolidation in 2021, and we are in a new bull market for oil. Now, a lot of people don't even realize it because we've been consolidating sideways since 2021, 2022 till today. So most people will say, you didn't make any money the past year or something like that. Well, a lot of the companies didn't do that bad, but there were a lot of companies that did have some pretty big pullbacks. But we're still in a secular bull market. It never ended. And markets don't go straight up. They move in waves. That's what you need to learn. You need to learn the longer term big picture view. You can't be bearish in the middle of a bull market because you can't load back up in the companies. In a bull market, you hold the rips and buy the dips. In a changing bull market to bear market, you got to sell out of the top. And then if you play some of these other, companies, you just buy them and then never sell. And that is so far off the radar for most people that they have no idea what strategy they're even deploying in the markets. And you need a strategy. You need to know what strategy works the best in these markets. Period. What's the best strategy? And I know everybody wants me to tell them what that is. But Bitcoin has been underperforming oil. A lot of the really good oil stocks, if you take it from the bottom of 2020, it's underperformed. Nvidia's underperformed, Bitcoin's underperformed, Ethereum's underperformed. Now, if you only use the last year, obviously they've done incredibly well. So does that mean that you should be flipping in between one asset and another? In my opinion, no. I'm going to play the whole secular bull market. And wherever there is higher risk in terms of valuations, I don't play that. You just have to not be in the market. But that doesn't mean that you catch every single move of every single asset that's the best performing assets for each particular year. You're going to miss some of those. And that's part of being disciplined. It's part of buying undervalued assets and staying away from riskier, overvalued assets. That's part of the strategy in the game. So Aaron says, just FYI, the game is rigged if you're not a hedge fund. So stocks work best at night. Cumulative returns of the Spider S&P 500 ETF in percentages, intraday versus overnight. I don't know exactly what this means, but to me it looks like it performs better overnight versus intraday. And I don't know how this is possible like this. I mean, that is ridiculous. The difference in performance there. And that's why I'm sharing it. I just thought this was really crazy. It says this has nothing to do with hedge funds. Returns are greater overnight because there are catalysts outside of market hours, such as economic data releases. So I was reading this. I guess Don and Grady were going back and forth. I read the thread here, and I will give my opinion. So chart of the day, it says silver's now on a mission back to all-time highs. And this time, silver will break out of the 45-year cup and handle, so the overshoot this time around should be massive, maybe reaching $60 or $70 per ounce. And if you go back and look at Don's stuff, North Star says somewhat exaggerated by Grady there, I think, Don, clever misuse of scales in the way that he has showed this gap. But what this gap is, when I first looked at it, I was like, oh, that's just the ratio. Silver is undervalued in relationship to gold. That's all it is. And then these guys are like, well, it's over exaggerated. There's some comparison here. And this guy's like, he said this in 2023 and 2024. Maybe third time is a charm in 2025. I would not bet the house on it, though. Grady charts get people excited, but no have come close to his targets as of yet. See, I just think that this guy doesn't understand the market. Like, you can have these big charts, right? The big 45-year cup and handle. Do you think that's going to just explode higher in the next month? What are the expectations? It took 45 years to create the chart. What this means is that when silver's broken out already, that we are going to have a big, long bull market in silver. That doesn't mean that you go up 100% in a single year. It could, but it doesn't mean it will. It means that we've broken the pattern and that the upside is possible now. And it may still require patience. Everyone in this market is so impatient, it's unbelievable. And I'm sure you guys have heard the saying, the market is a mechanism for transferring money from the impatient to the patient. So people who are patient are the ones who collect all the money from the impatient people, who go back and forth, change their mind. They have a lot of FOMO, the fear of missing out. So what they do is they hop from asset class to asset class, chasing price performance. And then what they generally do is they lose money because they'll buy at tops and sell when it's coming down. They think that the trend will remain intact. They don't buy the undervalued asset, know what the value of that asset is, and then just sit in it. And then some years it will be incredibly good. Other years it may not go up very much. You have to identify what's in a bull market and what's in a bear market. And I think Grady said something down here, if I remember, and it was on the ratio. I was like, yeah, that's exactly the way that I see it. So there's a lot of people in this market, and it depends who you follow. But I'll be on, I'll be honest, guys. I think Grady is probably one of the better people on Twitter. Like, I think he's probably top five. He is really good. Now, I don't know what his service is. I don't know anything beyond that, but he's basically nailed the cycles. And if he nails the cycles, then everyone else is basically blind. I mean, they're basically, I mean, they're not even close. I mean, Grady, he's really good. He is one that I would say is pretty equal to myself when I look at things because I catch a lot of things that other people don't catch. At least I'd like to think so. And then I buy and I'm patient enough to just sit in it. Other people say it's a missed opportunity, but their returns are less than mine. So I don't, it doesn't make any sense. So what I've done is I've scoured the YouTube, I've scoured Twitter, I've scoured all of these areas looking for the best strategies to deploy myself. Now, I understand my strengths, I understand my weaknesses, I understand a lot of things, and my strengths are generally better than most people's strengths. My weaknesses are still stronger than most other people's strengths. That's one thing I also found out. I can trade better than most traders, but I don't trade. It's not the best strategy. The best strategy is the one that makes the most amount of money with the least amount of stress and the least amount of problems. And that is what I found and what I'm studying of the largest returns in the market. So I'm adopting those strategies. So the strategies that I'm adopting may go absolutely counter of opinion for those that are short-term traders. And I'm okay with that. So what people want is they want people to agree with them. They want people to agree. They want to come out and be right. I don't really care about any of that. I just want to make money. I want to make a lot of money. And the markets are the best way to do it because there's no limit to how much you can make. And if I'm right, I am right and I make money. There's no arguing yourself out of it. So I think Grady's actually probably one of the better ones, is what I'm going to say. Here's Burns Co. So Meg Energy, more insider action from CEO Darlene Gates. Added another 12,300 shares today. That's around 463,000 drop this month on stock. This past month in December, guys, the oil and gas space is literally buying all, the insiders are all buying their stocks up. Do you think they think oil is going to go higher? They have to. I mean, we've seen hundreds of millions of dollars purchased in the oil sector in insiders. I haven't seen any other insider buys anywhere close to that of any other sector outside of commodities is what I'm describing, the commodity section. I don't know what they're doing over in tech. I think they're all selling, but everyone's buying energy from the insiders in what I think are the best companies. Renmax says, we don't feel good about one-family construction in the quarters ahead. New single-family completed units for sale has climbed nearly 60% against last year. This is not an encouraging sign for residential construction in the quarters ahead. Builders will curb production and cut prices. And this is housing starts, and you can see that we've been tracking sideways since 2019. And affordability is having an impact, for sure, for sure. That's why sales have been down, existing homes and new homes, and the mortgage rates, they're high. So affordability is definitely having an impact. Totally agree. I don't think we'll crash. Maybe housing starts might go down, but I don't think we'll crash in house prices because we don't have a lot of inventory. Inventory being existing home inventory. We're at 3.8 months, which is incredibly low. So Macro Edge says the home building situation index fell to a new all-time low this month as completed inventory rose sharply and sales remained depressed. Now here's my question for you guys. Where would you buy on this chart? I would buy here, here, and right where we're at. I would actually go long because the home building situation index looks so poor. Where you want to go short is when things look good, when they're up here before they turn. When they're up here before they turn down lower is where you want to be. So uh, you have to be a contrarian if you want to make money. Warren Buffett says, leverage is the only way a smart guy can go broke if you owe money and can't pay it off. Just pay for everything. Do smart things, and eventually you'll get very rich. Warren Buffett. Monish, I like Monish. I think he's one of the best investors. Heads I win, tails I don't lose much. There's your risk reward and asymmetry. Heads I win, tails I don't lose much. So he's buying it when things are underpriced and cheap, and the value is good. Let's go with Paulo here. Usually Gen Z and millennials say cope. They mean denial, as this misconception of how a trade works grows. The risk to those who think this way is they grow blind to bias. Ego may seem like the source, but the real root cause is usually low self-esteem or other confidence issues that are overcompensated via reckless behavior. You can't teach this. The market and life charges tuition and sends you the bill. Maybe you'll learn from it or not. And then we cycle again and again. And I think he's talking about all of the crypto people they're all going crazy on Twitter. Like the sentiment is absolutely insane for crypto. It's euphoric. Totally euphoric. Everyone, all they talk about is how rich they're going to be. They're going to be so rich when crypto goes up. It's going to be so amazing. These are all very inexperienced investors for the most part. They think that the trend will continue. Maybe it will, maybe it won't. I don't know how to value it, and neither do they. They're just in it because it's going up. And most of those cryptos are absolute garbage. And that includes even the big ones. They're not very good for a payment system. There's absolutely no use case for any of it. For the most part, maybe a few. Maybe XRP. Maybe. But I wouldn't touch that with a 10-foot pole. Because you know who wants you to be there? The government wants you to get in this crap. And whenever the government wants you to be in there, it's almost like they're going to pull something on us and put some central bank digital currency in and be able to track and shut off everyone. I don't want that. Be careful here, guys. There's a lot of people who've made some money pretty quick in this stuff, and they're going to get absolutely smoked because they have no idea what they're doing. They don't have a strategy. There's no way to value it. The heck are you going to do? They're going to get smoked. Here's Martin. He says, why would someone who has a mortgage or renting buy a $75,000 to $150,000 car, let alone two of them, is beyond me. It makes zero financial sense, but I see it all of the time. I don't know. I mean, I drive pretty crappy cars, I'll be honest, guys. Like they're reliable, but if someone looked at it, they'd be like, this dude is so poor, it's unbelievable. And it's the exact opposite. A car, if you look at the way that most of these cars are made, I think that some of the more expensive cars are more crappily made. So I buy whatever I think is the best made cars. I think, well, when working on a lot of the cars, I think Honda's pretty good. I think Mazda makes excellent cars. I really, really like Mazdas. I think Ford is blah. I think Chevy is blah for the most part. I own a Chevy, but it's really made by Daewoo because the Chevy Aveo was purchased. They bought out Daewoo, and it was Daewoo made. So I don't think that car's that bad, to be honest. But there's a lot of cars out there that are just they're crap. I'm not a big fan of Mercedes. I'm not a big fan of some of the BMWs. The older ones aren't too bad for BMW, like the E36s, the E46s are okay. They're good. After that, they run into some problems. But for the most part, I think Honda makes the best engines. Period. I think Mazda makes the best cars for the price. For the price. When you start breaking down and looking at the design of the components, looking at the design of the suspension, all of that stuff. So why are people spending all this? Because they want to look cool. And looking cool costs a lot of money and it's really stupid. So when I see that, if they're renting and they have a $100,000 car, all I see is that person just doesn't have their SHIT together. They don't. They don't have it together yet. So question, Bitcoin seems to simply be a proxy for global M2, but on a 10-week lag. So given that global M2 is falling, it seems Bitcoin is headed to $70,000 or $80,000 a coin. No? If that happens, what happens to companies running Ponzi's based on raising debt to buy more Bitcoin? I don't know. I don't know what it's going to do to MicroStrategy. Don't know. Here's the climate crisis was caused by environmentalists who thought nuclear power was bad for the environment. This is what they stole from us. They didn't steal anything, guys. This is coming no matter what. And what that shows is that it says concurrent decline of petroleum production and the rise of production of nuclear power in the United States. It's a growth rate of 10% per year for nuclear power is assumed. Actual rate may be twice this amount. And this is a long-term viewpoint looking plus or minus 5,000 years of the blip of fossil fuels and nuclear energy that we're going to have to run to sustain modern society. Now, the transition between petroleum and nuclear, there's going to be a transition between it where I'm guessing petroleum or oil is going to go ridiculously high. And then it's going to force everyone to go to nuclear. This is going to occur no matter what, in my opinion. I don't care what people say. Oh, we're going to go to solar. Is solar that efficient? What's your energy return on investment? Oh, it's not that great. We're not going solar then. It's going to nuclear, period. And the reason it will go to nuclear is because of the energy return on investment. We don't go backwards. You can't. You can't go back to burning wood. We have to go forward to a higher energy dense source. Nuclear is a higher energy dense source. That's about it. Solar is not. And we're going to run into mineral constraints. So what is going to happen when we transition between petroleum or fossil fuels, we'll call it, to nuclear, is they're going to go ballistically up in price in between. So petroleum could go to $500, $600, $700 a barrel as we go on the downside. The downside will be demand destruction. The upside is when you ride the cost curves of high cost producers. Cost curve, cost curve, cost curve, cost curve. You hit the peak, demand goes up, supply goes over, and then you go to demand destruction, where price needs to get destroyed. In that transition, I don't think it's going to be smooth. And nuclear has to be an answer, period. I don't think there's anything else out there. I really don't. Memo, a challenging year, but it's full throttle ahead. Look at where this is global oil inventories, oil on water. That's everything. Look how low we are. Oh, yeah, we're doing just absolutely fantastic. Now, here's my question, guys. Here's a question that I asked for all you guys. If 2021 oil was pretty expensive, right? And we were all stocked up in the Strategic Petroleum Reserve. Now we drain the Strategic Petroleum Reserve, and we've got super low inventory. How come the price is so low? How is that possible? How can we be so much higher here and so much lower when our inventories have dropped? Is it something to do with spare capacity? Do people think we've got all this spare capacity? Because I don't think we do. So good luck. This is going to be a fun ride. That's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. The website special is the discount code if you'd like to use it. We've got a question and answer session coming up Sunday at 5 p.m. So we'll catch you guys later. This is Finding Value.